lists as well as the trading decisions. You should go to your options, and you should go to general options, and you should select to store the full commentary to the trade journal. Okay, storing the full commentary to the trading journal causes the analysis comments to also be stored into your trading journal. Okay, the reason why that is not selected by default as a matter of interest is that it makes your trading journal very big. And funnily enough, the trading journal is the biggest part of any CentiTrader workspace file. So if you have 6 charts in a workspace, and you've got therefore 6 trading journals that have not only trading information but also analysis information, then you're going to end up with workspace files that could get very big quite quickly. 4 or 5 megabyte workspace files. If that starts happening to you, then you should go to Tools, Trade Journal, and you should clear your trade journal. Okay? Clearing your trade journal clears out everything, because before you know it, you've got trading journals going back, 15 years, and so on, which of course is a waste of storage space on your computer. Okay, so I think that this is a good analysis. I'm going to count the bars from there, from the 20-week cycle. Now, 78 bars have passed since the trough of the 20-week cycle. So, of course, what are we expecting? Well, we're expecting the formation of an 80-day cycle trough. And if we have a look at the average length of the 80-day cycle at the moment, you will see that the 80-day cycle is currently running at 89 days. Okay? So that means that the average length of that cycle is presently 89 days. Now, there are 2 schools of thought when working with Hurst cyclic principles, in terms of whether, if the average cycle length of a particular cycle is currently long, as is the case with this 80-day cycle, the average length of the cycle is currently running long, there are 2 schools of thought. Some people say that the next cycle will tend to also be long. Other people will tell you that, in fact, the next cycle will tend to be short. Okay? Where do I fall on that line? In fact, I believe the argument is flawed, because in fact what tends to happen is that there is no evidence that in fact the next cycle will be shorter or longer that I can find. I've analyzed loads and loads and loads of charts, and I've looked at whether cycles tend to revert to the mean, or which means that they will be shorter for the next iteration, or whether they will be longer. And in fact, I can't find any strong statistical evidence that suggests that that happens either way. In the very long term, of course, you do expect cycles to revert to the mean. In other words, we would expect in the long term the 80-day cycle to revert back to its average length of 68 days. But in fact, I have found that as often as you would find a short 80-day cycle, you will also find a long 80-day cycle occurring next. So what I have found it best to assume is that you will assume that the next 80-day cycle will occur somewhere between the nominal length and the average length. Okay, the average length, as you can see at the moment, is 89 days. The average length of the 80-day cycle is in fact 68 days. I'm not going to explain why that is, but the average length of the 68-day in stock markets around the world of the 80-day cycle is 68 days. Currently in the Australian markets, the average length is 89 days, so we would expect the 80-day cycle to form a trough somewhere between 68 days and 89 days. As you can see at the moment, there have been 78 days since the most recent trough, and it is possible that that trough occurred 6 days ago, in other words, last Friday. So, in other words, it would have occurred at 72 days after the most recent 80-day cycle trough. So, there's a very good chance that what is happening in the Australian market at the moment is that the market is bouncing out of an 80-day cycle trough. So, before you rush out and start buying stocks in the Australian Stock Exchange, let me point out to you that the fact that price is potentially and very possibly bouncing out of an 80-day cycle trough, let me point out to you that that is not necessarily very good news. According to most cyclic theories, you would expect that after price bounces out of an 80-day cycle trough, you would expect price to go up for about half the cycle length, about 40 days. Okay, which is about 5 weeks, so it's about there, and then you would expect it to come down again. Okay. According to Hurst cyclic principles, you do not expect price to bounce up for half the cycle length. How long do we expect price to bounce up out of the 80-day cycle trough? Well, that depends on the underlying trend. What is the underlying trend? The underlying trend is the combined sum of longer cycles, longer than the 80-day cycle. So let's have a look at the underlying trend for the current 80-day cycle. That's assuming that this trough has formed. Assuming that this trough has formed. If it hasn't, then it will be forming very soon. Okay, assuming that trough did form, in fact, last Friday, what is the underlying trend for the current 80-day cycle? Well, we look at the longer cycles. What is the next longer cycle? The next longer cycle is the 20-week cycle. That 20-week cycle would have bounced up from the trough over here, and it would have risen up. We draw a dotted line, and it would now be falling. So for the duration of the next 80-day cycle trough, the 20-week cycle is falling. So we write down -1 for the fact that that's a cycle that is falling. What about the 40-week cycle? Well, the 40-week cycle bounced up over here and is now coming down and is also falling. So we put another -1 over there. Usually, when you're making trading decisions, you only really need to look at the next 2 cycles up from the cycle that you're trading. You can, if you like. Some people do it regularly. You can, if you like, look up at the next longer cycle, and we could ask ourselves whether the 18-month cycle is rising or falling. Now, right at the beginning of this trader chat, we looked at the longer term picture, and I told you that the 54-month cycle was falling, and that in fact the 18-month cycle was falling as well. In fact, the fact that the 18-month cycle is falling is still debatable, but there is a huge amount of evidence to point to the fact that the 18-month cycle has already experienced a peak, and it is also therefore already falling, which means that the underlying trend is at least -2, if not -3, and the 54-month cycle, as we know, is also falling, so it's potentially -4. -4 means you have a strongly negative underlying trend. When you have a negative or a bearish underlying trend, that affects the shape of the cycle. Okay, what I mean by it affects the shape of the cycle, it's very simple. Trading using Hurst cyclic principles is all about the shape of the cycle. Okay, let's assume that we are bouncing out of the 80-day cycle trough at the moment. What cycle shape do we expect to appear? Well, the first thing is that we expect an M-shaped cycle looking like that, coming down to the next trough, which will be synchronous with the 20-week trough, which is expected sometime in July, I think. Okay, so we would be expecting a cycle like that, shaped like an M shape. But that M shape gets bent out of shape because of underlying trend. So let's redraw that cycle shape and present a more realistic cycle shape. Okay. The more realistic cycle shape for a cycle which is forming under bearish underlying, negative underlying trend is a cycle that has its peak very early. The bigger the underlying trend, or the greater the underlying trend, the earlier that peak will occur. So we expect it to occur early. Okay, so possibly sometime this week, sometime next week. Okay. By early, we mean it will occur before the midway mark. Okay, so in other words, before 5 weeks. 80-day cycles. The 80-day cycle is roughly 10 weeks in length, so we would expect the peak within the first 5 weeks. Okay, we're now approaching the end of the first week. Is it possible that the peak we've seen already this week is the peak? Yes, it is possible, because the underlying trend is seriously down. So we expect a peak early. What's the next thing that we expect? We expect the midpoint of the M. The midpoint of the M could be above, equal to, or below the starting point of the cycle. Okay? But evidence has shown us, statistical evidence has shown us that when underlying trend is severely downwards, in fact, this midpoint of the M is often below that trough. So the trough that formed last week, which we're now calling the trough of the 80-day cycle, the trough that's going to occur in 5 weeks' time is expected probably to be below that trough. Okay, then the market will bounce out of the 40-week cycle, and it won't get as high as the next peak, and it'll come down to its final trough somewhere over there. That is the cycle shape that we're expecting over the next 10 weeks. Okay? Over the next 80 days into the 40-week cycle trough. Okay, so in terms of a prediction, there you go. That's my prediction, for what's going to happen in the market. If you're trading that cycle, do you want to be going long now? Do you want to be buying buying into the Australian stock market? No, you do not. Okay. Do you want to be selling this move here? Yes, possibly, although you've got to be very careful, and according to Hurst cyclic principles, you would never have sold this little leg over here. According to Hurst cyclic principles, you first wait for this bounce up to occur over here to this second peak, and then you sell, you go short for this move here. Because under conditions of negative or bearish underlying trend, the best and easiest way of making money when selling short, and selling short is never a very easy thing to do, the best and easiest way of making money is to sell for this trade over here. So what would you be doing at the moment? You would be monitoring every single day. You would be monitoring the unfolding shape of the cycle as it develops in the market. Okay, so that's a look at happening in the markets at the moment. As a matter of interest, I'm going to quickly draw a few comparisons. Let's take a look at the 40-week FLD. When price crosses the 40-week FLD, that is confirmation that the 40-week cycle has formed a trough. There's the 40-week has formed a peak or a trough, and so there is the 40-week FLD. I'm pulling it up because I want to take a look at the NASDAQ in a moment, just for a few minutes before we finally finish today. As you can see, price crossed below that 40-week FLD in a perfect FLD price crossing of an FLD, because it was at right angles to the FLD. And I hope that all of you who have Sentient Trader